From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 31st, 2017. Today we're going to be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. Now, as you can see at the very bottom of my chart, I already have a trade going on the Australian dollar, a short from the 79.50 level. We'll talk about that here in a moment. But what I'm looking to do today is potentially add on to this position because the market is doing what we thought it might do, bouncing off support, falling back down, testing the trend line. And so I'm actually looking to potentially add back on to this trade. I've even closed some profit on the original trade too. So either you're in the trade and adding back on, or you are not in the trade and you're looking to add a new trade. Let's go ahead and take a look at this currency pair on the daily time frame first. There is a long-term uptrend. That's the blue trend line. Not too hard to see that it has been in a long-term uptrend. But if you look at the top of the chart, I have all these little circles there to represent periods where the market has been bouncing around support and resistance in a consistent fashion. That's what we're looking for. Let's go ahead and zoom it in on this a little bit. And so as we do that, and I'm just going to go way in like this, we can see these circles here, and they really represent the areas where the market is bouncing around in a consistent fashion. Really look at the blue circles in the middle, where you look to the left, there was 1, 2, 3, 4, 5, 6 days, 5 or 6 days bouncing around between the orange and the pink shaded area. Then it got above it for 5 or 6 days, bounced around between the blue and the pink zone. Again, consistent level pink zone of resistance and support. Then it found resistance 4 or 5 days here into the pink zone and orange zone again. Second blue circle in the middle. Then it got underneath it, went all the way down to the yellow shaded area. The green circle represents that period of time. Then it got back above, and for a long period of time, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, it bounced around once again between the orange and the pink shaded area. A couple of days ago, we thought, well, this is it. It's going to break above the pink zone, 79.65, go back to the blue zone. It didn't. In fact, it was a false breakout. You can see no candle bodies actually above 79.65. So we didn't buy it there because it didn't break out above 79.65. In fact, as it had this infusion of sell orders and the sellers came back in, took the short just at the bottom of the pink zone, 79.50, and are holding as it continues to pressure lower. Now, we don't want to get fooled into the false breakout. Now is the orange shaded area again, the 78.85, 79.05. We don't want to get fooled into a false breakout right here, and I'll put a little black X there. This was a false breakout because it just tested, it didn't open, didn't close, didn't open and close, didn't eat a full candle body, not underneath the orange shade area, so that was a false breakout. Just like up here in the black circle, that was a false breakout. So you can see those two false breakouts. So we don't know what this day is going to do we? We don't know if it's going to stay bearish. We don't know if it's going to suddenly turn bullish. We do have some US data today that could change the outcome here, but at least right now we don't know what's going to happen. We don't have high confidence yet. We need it to stay under the orange zone if we're going to have higher confidence that it's going to continue to go down. And we already know where it's going if it goes down, right? We already know it's going to go down to the yellow zone. Why? Because that's what it did here in the green circle. We know what the big guys, what the bankers are looking to do. If it breaks the orange zone in the direction of the current momentum, we're looking for it to go down to the yellow zone. That's a fact. That's what the market has done before. That's what we expect it to do again. It doesn't have to, and there's no guarantee there, but that becomes our increased expectation because that's what the big guys, the people causing bearish and bullish red and blue candles, that's what they did before. Before, inside the blue circles, we could see they were bouncing around, buying the orange zone, selling the pink zone, selling the blue zone, buying the pink zone, selling the orange zone, buying the yellow zone. So again, we can see what they're doing just by looking at all these daily candles. So all we're doing is looking to take advantage of what they're doing and jump on board the bandwagon. So at this point, what we're looking for them to do is break this orange zone, break 78.85, and send it on down to 78.30. We need that clear breakout though. We don't want a false breakout like the two black X's below and above this area, the orange and the pink shaded area. Let's go ahead and take it on down to the 4-hour time frame, and let me zoom it over here like this. So again, let me zoom out a little bit. So again, look back here where the black X is. Again, it was a false breakout. No singular candle body opening close underneath it. And in fact, there's another one back there to the left. If you really get picky about it, right here, you can see the two black X's under the orange zone. False breakouts, just a quick spike underneath there and a return back higher. And even up here where I had the black X at the top, you can see it wasn't a full body above there. It was a blue candle, then a red candle, and then continued to go down. So no full body. There was this infusion of sell orders. So both of them, there wasn't a full candle body open and close above or below the orange or the pink zone. And so that's what we need to see to increase our confidence. It's all about increasing confidence. It's never going to be a guarantee, but increasing our confidence of what the market's going to do. So if it stays under the orange zone today, even rallies underneath it as a retest, giving us better risk reward, by the way, that becomes the opportunity we're looking for. No false breakout, real breakout. We'll look to go short on the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.